What is going on, all you people out there? Ladies and gentlemen, today is Wednesday, November 3rd, 2021. Some of you caught that yesterday. My mistake. I said it was 2011. Maybe I'm a time traveler. You just don't know. But hey, today first, mortgage rates. Mortgage rates, as we discussed yesterday, as you know, the 10-year Treasury yield, the 10-year Treasury bond yield, mostly tied to 30-year mortgage interest rates. They correlate. It's slight uptick today, 10-year note at 1.57%, and the 30-year average mortgage is sitting at 3.14%. Today, I am going to make a prediction. This is my first prediction on this channel. The prediction I'm going to make is that we are going to have a multi-decade increase in interest rates. I believe, in my opinion, that we are going to see a gradual increase in interest rates over the next 20 years. So be prepared for that. Okay? I have a bone to pick today. Let's talk about the housing market and some what ifs. A lot of news yesterday. Let's talk about some what ifs. What if a multi-billion-dollar publicly traded company that everybody knows the name of, that everybody used to look for houses, and everybody goes there to search for houses when they're bored or whatever, okay? Everyone goes there to search for houses, and that company sits back and they collect all the data. They're collecting all of the data. They just know what zip code is looking at what zip code and how much those people can afford, and they're looking at that zip code and they know how much those people can afford. Now let's say that same company goes into that same zip code and starts buying up houses. Even though sometimes the sellers are taking a little bit less than they could get sometimes on an open market with an agent, but they pay these high fees because of a convenience factor. It's all cash, quick close. But let's say this company is scooping up houses for actually less than they could cost. So let's say, for example, that company buys 30 homes within a 2-mile radius. And let's say that price is $300,000. And on that 31st home, they buy it for $340,000. Even though they know all of the comps, because most people have to get a loan. And if you get a loan, that means you have to get an appraisal. And when you get an appraisal, they look at the sold properties in that same area and same size. But this company pays cash. They don't need an appraisal. So why do you think they would pay $340 for that 31st home when they paid $300 for all the others? Well, what that just did is create a new comparable sale or comp. So when they go to sell the other 3 homes, they can sell those for $340. Are you following me? That extra $40,000 just made them $1.2 million in that one neighborhood. Because, from their research, they know how much people can afford in that zip code. Weird. But they come in to that 340 property and they know it needs some work. So they put some paint, a little bit of carpet. Maybe they don't even put carpet. Maybe they just shampoo it. And they put a little bit of spackle on. And they remarket it and rebrand it as a remodel. So now they can sell it for $360 because they know off of their data what people can afford. But imagine this company starts financing to people. Imagine if this company had their own title company. Imagine if this company started using their own contracts instead of state-approved ones. That would be a strange world to live in. I don't know if you saw this yesterday, but there's a company called Zillow. I think you've heard of it, and a lot of people start their home search there. And I've been telling clients for years, their valuation model sucks. It sucks. It's garbage. It's trash. It sucks. No good. Apparently, they've been using this algorithm and artificial intelligence to factor in the future pricing of housing, but they didn't factor in the cost of labor or materials or sitting on massive inventory, which they have over 7,000 properties that they need to liquidate worth over $1 billion. And they are exiting the iBuyer flipping business game. They're out. They're out. Zillow is planning to let go of 25% of their employees. They said yesterday that the company currently has 8,000 employees and they're letting go of 25%. That's 2,000 people. I don't do public math, but that's 2,000 people that are getting laid off by Zillow. Man, Zillow lost more than $420 million in the 3 months ending in September. That's roughly the same amount that company had earned in total during the 12 months prior. Zillow stock intraday, it's currently down to $68.96, and it was up above $105 per share just 2 days ago. So, really interesting stuff. Their valuations have been off. A few years ago, the CEO of Zillow had his Zestimate on his penthouse in New York City. And I don't have the exact numbers, but it's something along the lines of Zillow had it estimated to be worth X amount of millions of dollars, and it sold for very little bit amount of millions of dollars. And it was something off like 75 or 80%, if I recall, off the top of my head. So what does that tell you about their Zestimates? I recommend using a professional, because the real estate professionals who do this every day, who are working with the people face to face every day, who actually care about the general public, not what their shareholders think, not what Wall Street thinks, man, I got a bone to pick with that, okay? Because nobody cares about you. You got one side for this side, one side for that side. Who's for the middle class? Really, who is for the middle class? It's a really frustrating thing that's going on, in my opinion, and something needs to be done about it. We need to come together, find a way to come together, and stand up to those powers that, unfortunately, don't give a shit about us. There's something we can do. We got to do something. I'm open for ideas. Maybe we need a third-party political system in this country. Maybe we need one. I think we do. It's always right, left, fight about this, fight about that. But really, it's the same bird with two wings, but they're all flying the same direction. How many of these people get busted for insider trading? You all know they do it. You all know they do it. But it's a two-tier justice system. Do for thee, but not for me. It's rough out there. So anyway, Zillow, they're out of the flipping business. They're out. They're done. They're gone. They may come back down the road, but they're losing a lot of money. They have to lay off 25% of their workforce. It's very interesting times. But again, use a professional who can properly evaluate your home. If you're in the market to sell your home or get a price valuation, reach out to me. We have a network of professional elite agents internationally, not just nationally in the United States, internationally. We have a great network of trusted professionals that we can refer to you. So if you're interested in what your home is really worth, reach out to me. Okay? Anyways, enough about Zillow. No, I got one more thing to say about Zillow. This company charged us agents who wanted to purchase leads, which I'm all for capitalism. I'm all for paying for business, the cost of doing business. But this company said, give us your money. We're going to give you leads. We won't share the leads. They shared the leads. They said, we will never become a brokerage. We won't compete with the agents. We just want to provide this service for internet home shoppers, and it's going to be great. Well, they lied. They became a brokerage, and I believe all 50 states in the United States. They lied. They took our money as agents, thousands of dollars per zip code for leads. They took our money, and what they did was they became a brokerage. They did what they said they weren't going to do. Now they have their own lending. Now they have their own title companies. Now they have their own contracts they use, which are not state approved. Very interesting stuff that's going on. Okay, enough about Zillow. Like I said, here's another thing that's happening right now. If you are a renter, if you're a tenant, you might have noticed an increase in your rent. It might have gone up. Rents are surging and tenants are getting sticker shock. Many tenants are seeing steep increases in their rents, which is a reversal of the trend during the early phase of the pandemic as urbanites moved to suburbs and exurbs. And as they return, they're seeing that discounts on rents are not only quickly vanishing, but rather they're surging. Even those tenants who stayed and they didn't move and come back, their rents are going up too because of such high demand. And the CEO of Open Igloo, Aliyah Muhammad, told NBC that renters who originally received pandemic pricing are now experiencing steep rent increases at renewal, sometimes upward of 40%. And she said that, I'm amazed this is legal, but it's completely legal. Not legal advice, mind you. I would check with an attorney on that, but apparently it's legal. Many tenants are not protected by rent control policies. There are a few states, however, that limit how much rents can increase in a year. For example, in Oregon, most hikes are limited to 7% plus inflation. CNBC reported that. Rents in the 10 largest tech cities, such as New York and Austin, have surpassed their March 2020 levels by an average of 6.3%. That's according to Realtor.com's monthly rental report. In most of these cities, the September rental growth rate is higher than prior to the onset of the pandemic. And the cities with the largest annual gains are Austin, which is up 22.3%, and Denver, Colorado, which is up 15.5%. And that was reported by Realtor.com. So, Zillow, rents are up. I'm going to talk about tomorrow how to live for free. If you don't own a property, I'm going to teach you how you can purchase a multifamily home. It's going to cost you some money up front, of course. Purchasing a home costs money, but this particular investment vehicle will allow you to live rent-free, very close to, or actually get you some positive cash flow. I'm going to talk about this strategy tomorrow. It's a house hack. I think you'll like it, especially if you're younger. You don't mind renting out some units and buying multifamily. You can do it with 3.5% down. It's great. It's very interesting. I think you're going to love it. You can build equity, you can have cash flow, and you can live just for about free. I'm going to talk about that tomorrow. Okay? Thank you everyone for checking in. Shout out to Greg Manarino and his Lions for checking out the video. You guys are excellent. I love you guys. I love the comments. Thank you so much. Keep them coming. Shout out to my wife who is very supportive, Harley Dove. Thank you so much. Your office in the other room looks super beautiful. We needed more feminine touches in here. So thank you, my dear. Thank you, my dear. Okay. Going to talk to you guys tomorrow. This was it today, November 3rd, not 2011, 2021. You guys have a magnificent Hump Wednesday. We're going to lunch at Bonito Michoacan with our Wednesday lunch group. Hope you guys have a blessed day. Stay healthy and be safe. See you.